Many new notary signing agents believe that all loan signing assignments are the same, when in fact, notary signing agents can be asked to handle many different types of assignments. As an owner of a nationwide signing service, I see 5 types of mortgage packages the most often, and they are mortgage refinances, purchase loans, seller packages, HELOCs, which are home equity line of credits, and reverse mortgages. Knowing what to expect when you get a loan signing assignment and being familiar with various loan documents will allow you to be more prepared to do the perfect signing. Here's what you need to know about each type of loan signing. Number 1, refinance. Now, this is probably the most common loan signing you will encounter as a signing agent. And a refinance is simply when a borrower pays off their current mortgage and gets a new mortgage. A homeowner refinances their home to either achieve a lower interest rate and save money on their monthly payment or take cash out based on the equity they currently have in their home. These are very, very straightforward loans. The borrower is simply agreeing to pay back the loan at an agreed upon interest rate for agreed upon duration. Number 2, purchases. Now, this is the second most common loan signing you will encounter as a loan signing agent. This is a transaction when a home buyer borrows money from a bank to purchase a new home. If you can execute a refinance, you can absolutely execute a purchase, as the loan documents are essentially the same. Because remember, whether someone is borrowing money to pay off an old or current loan, or they're borrowing money to purchase a house, they are still just borrowing money. Number 3, a seller's package. Now, this occurs when a homeowner sells their home. See, when a seller sells her home, there is paperwork that goes along with the sale of that home, and it needs to be signed, and usually 1 or 2 documents will have to be notarized. Now, these signings are usually only around 20 to 30 pages and pay less than a traditional refinance or purchase signing, but they usually take half the time. And then there is HELOCs, number 4, which is HELOC, which is an acronym for Home Equity Line of Credit. This is a line of credit tied to the equity of a borrower's home. For instance, if a borrower's home is worth $500,000 and their current mortgage is only at $200,000, that means the homeowner has $300,000 in equity. In this example, a homeowner could ask a lender to give them a line of credit against their home for $100,000 of the $300,000 of equity that they have. This gives the homeowner access to money for a rainy day or home renovations or etc. These loans typically have a variable interest rate versus fixed and are very popular during a hot housing market where the values of homes are increasing. And then number 5, a reverse mortgage. A reverse mortgage is when a loan is taken out by a homeowner, usually 62 years or older, that converts their home equity into cash income with no mortgage payment. Reverse mortgage loan documents can usually be over 200 pages because they typically have 2 deeds or mortgages and 2 notes. These type of signing assignments can take an hour and a half or more because of the number of documents in them. And in addition to that, clients are older, so patience is key. Here's a pro tip. Learn and understand these documents before you accept an assignment. Before you accept any of these loan signing assignments, it is so important that you are familiar with the documents. Purchase and refinance transactions will make up about 80% of all the signing appointments you will see as a notary signing agent. But if you are not ready or prepared for the other 20% of the signing opportunities, you are not maximizing your income potential as a signing agent. Additionally, if you make a mistake on a HELOC, a seller package, or a reverse mortgage because you are not familiar with those types of loan packages, you may not get business again from that source. And this can be a costly mistake because it would jeopardize your relationship and ability to get all the refinance and purchase transactions from your client. So my biggest piece of advice is to get familiar with refinance documents or purchase documents. And a simple way is by asking a family member or friend who's refinanced or purchased recently to take a look at their documents. And if that's not possible, you can sometimes find sample documents online, or you can take a course like the loan signing system that has sample documents for you to learn from.